In this video, we're going to work on your practice exam, problem number 1. In problem number 1, the president of the retailer, Prime Products, has just approached the company's bank with a request for a $30,000 90-day loan. The purpose of the loan is to assist the company in acquiring inventories. Because the company has had some difficulty in paying off its loans in the past, the loan officer has asked for a cash budget to help determine whether the loan should be made. The following data are available for the months April through June, during which the loan would be used. On April 1st, the start of the loan period, the cash balance will be $24,000. Accounts receivable on April 1st will total $140,000, of which $120,000 will be collected during April, and $16,000 will be collected during May. The remainder will be uncollectible. Past experience shows that 30% of a month's sales are collected in the month of sale, 60% in the month following sale, and 8% in the second month following sale. The other 2% is bad debts that are never collected. Budgeted sales and expenses for the 3-month period below follow. So we have all of our numbers for our sales, purchases, and all sorts of other expenses. Merchandise purchases are paid in full during the month following purchase. Accounts payable for merchandise purchases during March, which will be paid in April, total $140,000. And D, in preparing the cash budget, assume that the $30,000 loan will be made in April and repaid in June. Interest on the loan will total $1,200. So in requirement 1, we're supposed to calculate the expected cash collections for April, May, and June, and for the 3 months in total, and then prepare a cash budget by month and in total for the 3-month period. So let's get started. Let's look at what's going to be collected in April. By the way, I'm hitting Alt-Enter to go to the second line. We're going to look at what's collected in May. And then I just hit Enter to accept the cell. And collected in Alt-Enter, June. So the first thing that we have to look at is the accounts receivable on April 1st. So we were given in the problem that $120,000 of that amount will be collected in April, and $16,000 will be collected in May. Now we have to look at the schedule of collection for April sales, May sales, and June sales. So our April sales, all on account, are given as $300,000. We're told in the problem 30% are collected in the month of sale, 60% in the month following sale, and 8% in the second month following sale. So for April, the month of sale is April, the month following is May, and the second month is June. So since our April sales are $300,000, 300,000 multiplied by 30% is what's going to be collected in April. $300,000 times 60% is what's going to be collected in May. And finally, 300,000 multiplied by 8% is what's going to be collected in June. Because again, we were given that in the problem. 30% in the month of sale, 60% of the month following sale, and 8% in the second month following sale. Now we need to follow the same pattern for May sales, but May sales are going to be collected in May, June, and July. If you want, you can do another column for July, but it's not necessary because the problem is only asking us for April, May, and June. So we're given in the problem that May's sales are $400,000, so 30% of that amount will be collected in the month of sale, which is May. And 60% of that amount will be collected in June. And again, 8% in July, but we don't care about July. And then finally, we have to look at June sales. June sales are given in the problem as $250,000. So June sales are going to be collected in June, July, and August. And because of this problem, we only care about June. So for June, I'm going to take the $250,000, multiply that by 30%, and now we're ready to calculate the cash collections. So here in cell B12 equals sum. I'm going to make sure that I add the entire column because Excel will ignore blank cells. So I'll make sure to add all of the numbers not only in column B, but also in column C and column D. So close up the parentheses, hit enter, copy the formula across the cells. Now I'm going to add those three numbers using the auto sum. You can do it from the Home tab or easier here. If I click on the Formulas tab, notice auto sum is the second one there, and it will add all the cash collections in April, May, and June. And we now have all of the numbers that we need to fill in part 1. So April would be $210,000. May would be $316,000, and June $339,000. And finally, for the quarter, the three numbers added together, $865,000. Okay, now that we've got our schedule of cash collections correct, let's move on to requirement 2. And requirement 2 is just going to be our cash budget. I don't think I'm going to need Excel for this because most of the numbers are going to be very easy. We're not going to need very many calculations. So we were given in the problem, in part A, that the beginning cash balance is $24,000. So I'm going to put in the $24,000 beginning cash balance for April. And now I've got these three numbers correct, the cash collections for April, May, and June. So I'm going to put in those numbers, $210,000, $316,000, and $339,000. And we already have the number for the quarter, $865,000. So we have $865,000 available over there for the quarter, but we'll move on with our ending cash balances. Now, for payroll, lease payments, and advertising, we're just going to assume that those are paid in the month that they are incurred because we don't hear anything else. So they tell us about merchandise purchases, but nothing else, so we're just going to assume that the payroll, lease payments, and advertising are paid in the month. Notice equipment purchases in June are only listed at $65,000, and depreciation we completely ignore. It does not go on a cash budget because depreciation is not paid. So the only thing that we have to do is part C. Merchandise purchases are paid in full during the month following purchases. So this $210,000 won't be paid in April, it's actually going to be paid in May. This $160,000 isn't going to be paid in May, it's going to be paid in June. This $130,000 is going to be paid in July. So that really is only going to be the only trick that we have here. So let's get moving with this cash budget. So for the merchandise purchases, we're just going to lag 1 month behind. So we're told that the merchandise purchases that are going to be paid in April are $140,000. And then we're going to lag 1 month behind with the purchases. So April's purchases of $210,000 will be paid in May. And May's purchases of $160,000 will be paid in June. Now all I have to do is total $140,000, $160,000, and $210,000. I believe that totals $510,000. Next, we'll move on to the payroll. So payroll is just given as 20, 20, and 18,000. The total of that is 58,000. Next, we'll move on to our lease payments, 22, 22, and 22. $66,000 in total. Advertising is also going to be given 60, 60, and 50. Total $170,000. And finally, equipment purchases 0, 0, and 65,000. So the total for the equipment purchases, $65,000. Now, all we have to do, now that we've got the total of our cash budget, now we have to work in the borrowings and the repayments, and then carry through our ending cash balance to the beginning cash balance the following month. So we were told in Part D, in preparing the cash balance, assume that we're going to borrow $30,000 in April and repay it in June, along with $1,200 in interest. So borrowings in April are going to be $30,000. So notice now our ending cash balance for April is now $22,000. So we're just going to start off May with $22,000. Now there's no more financing. So May, we have our total cash available. Then we have our total disbursements. It calculates it for us. So our ending cash balance in May is $26,000. We start off $26,000 for June. And now we have to repay in June the $30,000. So we put in the $30,000 repayment. Oh, looks like that should go in as a negative number. And we put in that we're going to pay $1,200 in interest. So I'm going to put in a negative $1,200 in interest. And notice now we come up with $18,800 at the end of the quarter. So now for the quarter, we're going to start off with $24,000. At the beginning of the quarter, we don't add the cash balances because the quarter is still just the beginning of the quarter is April 1st. We just need the cash balance on April 1st. So we're going to add together the total borrowings is $30,000. The total repayments and the total interest paid. And notice we come down to exactly the same ending cash balance, $18,800. So it looks like we're all correct, and we have now finished your practice exam, problem number 1.